Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos on the technical analysis that I'm seeing in the market today. So here we've got GDX, the VanEck Gold Miners ETF. I know a lot of people follow it and we are seeing some extremely interesting stuff in the market today. First of all, we are here on the daily chart and we see two different patterns that we have on the chart. We can see this long-term overhead resistance line and this bold black line here, and this has acted as a huge barrier to get over here over the course of the last 6 years. And we're coming to a point where I believe that we might come to test that in the near term future. Second pattern is a imaginary pattern that I kind of just made up. However, I like it because it has been following the price action fairly well, and it is this horseshoe pattern right here, marked by these two curved lines. And I like this pattern just because price has been proven to bounce off of it with the same vigor that you would expect if you were throwing a ball at this kind of curved area. For example, we come down here, bounce off, we come up here, bounce off the ceiling, we fall all the way back down to the floor, we slant sideways, we get rejected off the top there, and then we move up, and I'm not going to draw it, but from this we get rejected off this and move the same direction we would expect. And right here, I think that we might see a large rise up, but this is not a real technical analysis chart pattern by any means. So I just wanted to get that out of the way. Everything else here is legit. But what do we have in these bubbles here? I guess I've got a couple, I've written down a couple notes here, a couple things to keep in the back of your head, reasons to be potentially bullish here on gold in the medium to long-term charts. So first of all, we've got London and Europe displaying topping action in the modeled time frame of May to June. Gold and silver markets indicating a downside resolution. The gold-silver ratio indicating a credit contraction, decreasing credit availability. Credit spreads are widening, the yield curve is flattening, commodities are resolving to new lows, speculative sector of the stock market is losing conviction. The speculative sector was QQQ, otherwise known as the tech sector. There has been a shift in the stock market from investors going from growth stocks to value stocks. All of these market actions are consistent with the model presented, which is formulated from the past 5 credit cycles. So those are just some potentially, fundamental or politically driven events that are going on in the world today, all of which are fairly bullish for gold and miners in the long to medium term. My other bubble over here is a description of 3 things that I look for in order to determine whether or not it's a true breakout. And the first one is penetration, the second one is volume, and the third one is strength. So for penetration, does it close 3% beyond the trend line? Does it get up here and break out 3% above this level? That shows conviction that we want to get above these prices. Volume, did volume rise notably on the penetration time? And strength, did it just rise to the line, then feebly roll over? If it did, then any selling pressure would invalidate the move and it would fall back into the pattern. So keeping these in mind, let's zoom in here on the daily chart, and we see that we might have a hidden bullish divergence here. A hidden bullish divergence is when our oscillator makes a lower low while price makes a higher low. This is a cheat sheet for bullish and bearish divergences here. This is the regular divergence where our oscillator makes higher lows and our price makes lower lows. This is a bullish hidden divergence is characterized and a little bit harder to see because our price is making higher lows, and this might be in a downtrend even, but our oscillator makes lower lows. So just remember higher lows and lower lows. So back to the chart here, we can definitely see that price has a low and a higher low as our oscillator makes a low and a lower low. The difference between a regular divergence and a hidden divergence is for an uptrend, we measure from the top of our oscillator and the top of our price, and we get our divergence here. I've just marked one right here on the chart. So our oscillator makes a lower high as price makes a higher high. But for a hidden divergence, we look at the bottoms. And just to bring into light the psychology behind divergences, I have this bubble here. It says that hidden divergences are primarily useful for trend traders, as the occurrence of this pattern signals that prices have made a corrective retracement in a larger trend and that the trend is ready to resume. The main benefit of trading with hidden divergences is that the majority of the market's momentum is on your side, as you are trading in the same direction as the larger trend. Trading in the same direction as the larger trend is the key difference between hidden and classic divergences, and one that many new traders miss when looking to implement these strategies. The occurrence of hidden divergences can also act as a confirmation that the original trend is still valid. So we can see that with this long-term support here, stretching back from the last 2 years, our bottom right here, we came down to touch it, we touched it again right here, we were actually supported at this strong support line. Now for several weeks I've had the inclination that this was a descending triangle because of these two equal bottoms right here, but it would make sense that the larger term support line would come into effect before we would get to this bottom support line area. And right now we are seeing a very convincing bullish movement upwards. So that's on the daily. We have a hidden bullish divergence as well as price bouncing off of that support area. Let's go to the 2-hour chart. On the 2-hour chart, I don't have a whole lot to share. It's basically been the exact same for the last several weeks. We came down, set our A, B, C, D, and E within this move. I guess I can move E to right here. So E would signal the end of this little pattern, this symmetrical triangle that we have here, and it would be expected for us to break out above this trend line convincingly. Remember what I said on the daily? Did we move above it by at least 3%? What was the volume like, and what was the strength of that move? So I need to see us convincingly break out above this, come back and retest, and then I'd be looking at testing the 6-year resistance line right here again. On the hourly chart, this just shows the descending triangle action that I was seeing here. I saw us rise up into price, and then we hit our first level of resistance, come down, set our first level of support. We can mark this as A, B, C, D, and E. And we didn't quite get all the way down to E, and I'm not sure if this invalidates the descending triangle. I'm not sure if price is going to roll over and come back down and finally set in our E. It might make sense for that to happen because we are still a long ways away from reaching our apex. The average distance to a breakout in descending triangles is 64% of the way to the apex, and right now we are about half the way. This light blue arrow right here marks the 64% move to the apex. Again, the apex is where our resistance and support lines converge on each other, so this would be the average breakout point for a chart for GDX. It's also interesting to have our time here. I just drew this from the low here to the low here, and it spits out equidistant times for future action. And that's why I have my E right here, is I figured that we would continue to roll over, and this would be our next bottom area or predicted bottom area, because in the past we've kind of bled all the way down into this, and we see that again over here. We kind of bleed down all the way before we get supported. But again, on the daily chart, we have that long-term support line coming through right here, and we actually bounced off of it very convincingly right here. So I'm not sure if this invalidates the descending triangle, but I would still like to see us come down and form a low here on the support. We came up, we set this pattern here, we had our first resistance level, we had an A, B, C, D, E, and then we broke out, failed breakout, we dropped back into the pattern, and then we shoot up higher and hit D, and we have been falling ever since. But what I think is interesting is we can see how these support and resistance lines continue to have an effect on price as we move forward in time. For example, this support line right here, if we were to continue to draw that, we see that we may have bounced off of this support level and gone up higher. Obviously, we broke down further below this, but we were supported once here, and if we were to drag this even further across, we can see that price actually was hitting resistance at this point before we decided to move higher above it. So it's interesting just to keep in your toolkit that if you see a pattern, you can extend those lines and they will become important at later dates in time. For this resistance level here, if we draw this all the way through, we can see that we bounced off of this resistance line several times. Here we have an example of a regular divergence, and it would probably give a good explanation for this bullish run that we've been seeing. Here we have a regular divergence where our oscillator has a low and then a higher low, while our price makes consistently lower lows. And then we kind of have a snapping action as we finally convincingly move up. The bears take over here in volume. This is a volume indicator, and we see that our oscillator moves all the way to the top, and price is soon to follow. Our RSI, which is the measure of relative strength here in the price, never broke below this 30 line, this green 30 line here. We just floated above it, and we basically stayed flat. This is another divergence, so our oscillator, our indicator stays flat, and price moves down. This is a second divergence here on the chart. I would like to remain cautiously bullish on GDX for the short to medium term, because like I said, I do kind of expect us to hit this final support level, or else this entire descending triangle is invalidated. However, I did start off several weeks ago by saying this was a symmetrical triangle, and that would make sense because that is 2-year support, and this is only maybe 6 months support right here. So that 2-year support is coming through right here. But in the past, we have not. In the past, we have seen price move up fairly dramatically, fairly convincingly before falling back down to this level. For example, we had 1, 2, 3 spikes here before finally making a solid bullish run all the way up. Over here we had 1, 2, 3, and over here, we might have had 1, and then this might be 2. So I am bullish on the chart, but I would be cautiously bullish. So moving to the 30-minute chart. On the 30-minute chart, I included this 2-year support line. You can see how nicely and cleanly that has acted as support here on this chart. And I've included my descending triangle. So you can see both all support and resistance lines here in this chart on the 30-minute. Zooming in here a little bit, I do want to, another reason I would like to recommend staying cautiously bullish is that this is a resistance line here. We only have 2 points of resistance. However, I'd like to draw this line all the way through, and I actually cloned this line, and it fits very well on the chart as we have moved forward of several weeks. Looks like we found some support here at the 23.6% fib level. We came down and we bounced off of it, finding resistance right now at the 61.8% fib level. And I would recommend taking profits here at this 23.25. As far as our indicators and divergences go, we have price making a higher high here as our oscillator makes a lower high. This is a regular bearish divergence. And so those are 3 things that I'm seeing that would warrant being cautiously bullish / bearish here in the short term. You can see the targets that I had several weeks ago. In my videos, I had this as my first target, and this is my second target. This would be my first target because it comes in to coincide with this 2-year support line that is bolded darker than all the other lines, and this would be my second target because it would complete my descending triangle hypothesis. So my prediction last week was that we were going to continue moving forward. We were going to come up here, and we were going to flag out here and break out finally. We can see now that this was a bear flag here about a week ago, and it would be interesting to try to look at the measured move just off the cuff. So if we take this, we clone it, and we bring it over here, this brings us to a fairly accurate bottom range here, if this is a true bear flag. Mark that this is now resistance. We did get rejected off this level before we decided we had the strength to move up forward. And we have another example of a hidden bullish divergence. I was talking about them in the beginning of the video. Here we're talking about them on the 15-minute time frame. They're valid on every single time frame. So here our indicator, our CCI, which is a measure of volume, has a low and then a lower low, while our price has a low and then a higher low. This is a hidden bullish divergence, and basically it's kind of like a yo-yo. Once we go all the way to the top, we need to come back down, reload that kinetic energy before we can spring back up and roll back up to the top, hopefully even higher this time. So I do have a half position right now in gold miners. I got filled here in my target 1. I have a half position. I'm looking to add a full position here at target 2. Let's go to the 5-minute chart, and I'm seeing some fairly interesting patterns play out, and hopefully this 5-minute chart gives you some direction as to how to look at the price action coming into next week. So what I see here in the 5-minute is a potential cup and handle. So if this is a cup and handle, which I believe it might be, this could be the price action that I foresee playing out here over the course of next week, and it would make sense in the overall structure of the patterns that we're seeing. So here in the 5-minute time frame, I just wanted to note that this captures the price action for the better part of the last month or so, and so it is still valid in charting. When you get to the 3-minute and 1-minute, that's over the last 7 or 5 days. You can't really identify a lot. However, this does cover the last 3 or 4 weeks of price action, and therefore it is still significant in my opinion in giving recommendations as to what to look for in the short-term charts. I like to do my analysis on the long-term, the medium-term, and the short-term, just so you guys can have a full picture of what might be going on. So here, we hit our D. Over here somewhere is our E. In the longer-term pattern that we have, we can see that once we hit D, we got rejected off of it and came down into this wedge, A, B, C, D, E. We sprang up higher. And this makes sense. Our measured move was from the high here down to the swing low, our A, and we take this at the point of breakout, and our measured move came within a close range of this pop upwards. And then we came down and created what is, in my humble opinion, a potential cup and handle here, and it would make sense as far as the pattern goes so far. The larger term pattern is that we have not quite came to that 64% average breakout level of the symmetrical or descending triangle, and therefore I think that we need to move sideways for a little bit longer before we will have the momentum or the energy to break out convincingly. Right now I don't see enough volume here in the chart for us to come and break out of these levels. However, that's nothing to stop the short-term price action from continuing to rise 40-50 cents upwards. So with the cup and handle, we are in the middle of forming the right half of our cup, and then we need to form that handle here, and I've drawn maybe a theoretical price and time as well as direction that the cup and handle might take. I think that the direction of this handle here will move similar to the direction that we moved up here on the other side. And we can see that it was a very short term, I think this was a 2-day bullish run that we had, and I can see us having a very 2-day bearish run as well. And this would make sense as well as the overall context of the pattern, because it would come down and touch our 2-year support for another time. We would touch our 2-year support here again, and hopefully around this area we see a large increase in volume, and that might give us enough conviction to move higher and break above this long-term resistance here. But currently, as far as the price action goes, I see us coming into this wedge-like pattern, which again would kind of make sense as far as the cup and handle goes. But as far as this wedge goes, where we are in it, I see price rising up, setting our A, B, C, D, and we have yet to make this E. We can see this same A, B, C, D, E pattern play out over here. We have A, B, C, D, E, so it is a 5-wave pattern. And so these blue lines kind of show the price path that I expect. I expect tomorrow to be a fairly flat day to downwards, coming in, setting in our D. Then I think that we will have a last-ditch bullish run up here. I have this 23.6% level as a profit-taking region. If we do get that high, I'm doubtful that we will get this high. However, it's there just in case we do. I think that this resistance level at this point, as well as this 32.6 resistance Fibonacci, would come into play if we get to this level, and we would get rejected down off of it. So if you were looking for a short-term play, potentially, and you already have a position here in GDX, you could take profits right around this 38.2 level, which comes at about the $30 or $23 mark. At that point, I have this blue line. I can see us falling in, creating this handle. I think that we're going to break down, shoot back up, and then break down further. And at this point down here, kind of the same psychology as up here, we're going to run into support as well as this 78.6% fib level. This also down here, we formed a nice range of consolidation, and this consolidation is going to act as support here in the future. So going back to the 30-minute chart, we do decide to break above this small short-term resistance we have here, which I think is a possibility. I see us running to the 78.6% level. However, it is, keep in the back of your mind, this is resistance right now, and if we get rejected off of it, I think that we will see a ultimate run all the way down here to E. So there are two possibilities that might play out here next week. So just to conclude here, on the hour chart, the two patterns that I'm seeing, this black line is the 2-year support level, and these blue lines here are the 6-month support and resistance descending triangle that we are in right now. This is a short-term, maybe month-and-a-half long support and resistance channel that we are in. This channel is pointing to the downside. However, I gave the case that, we might be in a bit of a cup and handle situation right here, and there's reason to believe that we might head all the way back up to the 78.6 range. And there's also reason to believe that this channel, we're going to get rejected off of it and fall down lower. So we were supported confidently here at this 2-year support. If we do get rejected at this level, it would be interesting to see if this holds up again. I was very adamant in my video last week that I thought that this 2-year support would come into play on our wave down from D to E, and it definitely has. And I'm just curious if we have the momentum and volume here to break above this 78.6 and this blue line right here. One last time, this light blue range is our 64% mark to the apex of our descending triangle. This range is getting really tight, and so it's tough for me to predict with much accuracy what's going to happen. For example, it's easy to say over here at C that, we're bouncing off support and be right about that, and we have this nice long leg up, nice long leg down. However, we're working within this trend line and this trend line, and so that's why I'm having a couple conflicting viewpoints right now, is because the range is getting so tight, and I can see it moving in either direction fairly convincingly at this point. Anyways, I did my best, and that's been my analysis for GDX gold miners this week. Guys, thank you so much for taking the time to watch my technical analysis. It really means a lot. I spend a lot of time on every single video, especially these gold videos, and the support I've been getting has been very encouraging. Each video takes me an average about an hour to do, from making the technical analysis off screen, to filming it, to editing it, down to try and take out all of the uhs and ums and pauses, because I know that your time is valuable, and finally uploading it to YouTube to share with you guys. So if you like this video, I'd sincerely appreciate a like or a subscribe, and that way you can get my analysis every week. So please comment below if you have any questions on my analysis, any thoughts of your own, or a stock that you'd like an opinion on. So take care, and I'll see you next week. Good luck in trading.